Hi everyone, and welcome to this introduction to Nokia's second quarter results. My name is Melissa Shabe, and I'm Chief Corporate Affairs Officer for Nokia. Joining me today is Pekka Lundmark, Nokia's President and CEO. Welcome.
Thank you, Melissa. Pleasure to be here.
Pekka, could you please start us off by highlighting some of the results from the quarter?
Well, obviously, I'm delighted by the second quarter results and actually overall the first half year results. We had 9% constant currency growth in the quarter. And the very important thing is that this was broad-based growth. It was driven by all our businesses. Particularly strong were network infrastructure and tech, which both had a really good 20% top line growth. But it was not only all our businesses, it was also 6 out of 7 regions, particularly Latin America and India. Our comparable gross margin was up 270 basis points, 42.3%. This was driven primarily by mobile networks and tech. In mobile networks, we had a one-time software deal that supported the margin, but it was not only that, it was also 5G growth, very good progress in cost competitiveness and overall favorable product mix. So the combination of the top line growth, gross margin expansion and very good operational expense control resulted in this very good 12.8% comparable operating margin. And on top of this, I would like to highlight the fact that this was the 5th consecutive quarter of positive free cash flow.
Nokia launched its Threephase strategy back in March. How's it going?
Well, I'm pleased to confirm that we are making very good progress on our Threephase strategy, and I'd like to highlight 3 examples. And the first one would be the operational model, where, of course, the fundamental principle is that we have now given full financial accountability to our business groups, and that is now really helping us drive our margins. BGs are making very good progress on this. The second highlight would be the very important steps that we are taking to secure full competitiveness in mobile networks. And one of the key highlights of the entire quarter was actually the launch of the Airscale product family in mobile networks. And the third example is really the importance of technology leadership. As you have seen, we had 20% growth in network infrastructure, which was really driven by technology leadership, and there's actually more to come. We will have more product launches in the pipeline for the second half of the year. So good progress on our strategy.
Pekka, you mentioned the Airscale launch. What made that so significant?
Yes, as I already said, it was a major launch with an objective to make us significantly more competitive. The new product family has more capacity, it's lighter, and very importantly, it's more energy efficient. So it is also supporting our customers' sustainability goals. On top of this, it is O-RAN ready, very important for the upcoming disaggregation of some of the network architectures. And then as the final point, this pretty much now completes our journey where we are implementing the ReefShark chipset family across our entire base station, Airscale base station portfolio by the end of 2022.
Thank you. Could you give us a little bit more color on some additional feedback that you've received from our customers?
The feedback has been really fantastic. Of course, as we know, Airscale allows our customers to continue their 5G network evolution and the capacity evolution in particular. But the very important thing is that now we are able to combine the capacity evolution with increasing energy efficiency, achieving both goals simultaneously.
Our network infrastructure business has been performing extremely well. Can you give some highlights on that performance, and is it sustainable?
We had again double-digit growth, or actually 20% growth in network infrastructure. Excellent quarter. It is actually not that complicated. It just shows that what technology leadership can deliver when you do it right. And the highlight that I would like to mention this time is our fixed networks division, where the growth is really driven by broad-based appetite for broadband in homes, in 5G base station connectivity, in many different applications. In some cases, actually, this demand is driven by the COVID pandemic and the resulted lockdowns, which is driving bandwidth demand in many parts of the network. What we should remember, of course, is that when we move to the second half of the year, the year-on-year comparisons will actually get tougher. But having said that, I remain confident on the future prospects of this business.
Cloud and Network Services continues to rebalance its portfolio. What are their key developments for the quarter?
Yes, as you said, there is a pretty big portfolio rebalancing ongoing in Cloud and Network Services, and that is progressing well. And while we are doing that, we are making progress on the market. 5G core software is, of course, one of the most important products that we have in CNS, and the progress is good. We added 7 new deals in the second quarter, and we now have over 150 customers for 5G core. Another important product area is private wireless for enterprise customers, where we have also had really good growth, and we now have over 340 customers.
The technology business had another strong quarter with 20% constant currency growth. What enabled that growth? Any more details you can provide?
Of course, the fundamental part of this business is driven by the run rate of our patent licensing, which is in the ballpark of 1.4 to 1.5 billion euros. But very importantly, we are now expanding to new segments where automotive is perhaps one of the most important ones. And here's where we signed 2 new deals with 2 manufacturers during the quarter, which further kind of demonstrates the strength in our cellular portfolio, which we are now applying in new domains in addition to the traditional mobile phone segment.
Lastly, Pekka, we recently updated our financial guidance for the year. Can you explain why?
Well, as you have seen, it was really a robust start to the year. Great Q2 and great H1 overall, and as a result, we now expect our full year comparable operating margin to be between 10 and 12% instead of the previous expectation of between 7 and 10%. We have actually executed on our strategy a little bit faster than we thought ourselves. Great first half of the year. When we look at the overall picture for the full year, we need to, of course, remember that there were certain one-off benefits in H1. We have also been talking about certain market share and pricing related headwinds that we still expect to be there in the second half of the year. This all means that the typical seasonality in our result that we have often seen will be less pronounced in 2021 than earlier. And we will also continue to invest in R&D. And very importantly, since the semiconductor supply situation in the world remains pretty tight, we need to keep a close eye on component availability. All these factors have, of course, now been built into our new guidance of 10 to 12% comparable operating margin. So overall, I'm extremely happy with our second quarter, and I would like to thank the entire team Nokia for this achievement, and of course the hard work continues.
Thank you, Pekka. And thank you everyone for joining. If you'd like to find out more, please visit nokia.com.